It is Monday morning and the markets are open, which means we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where any day the markets are live, we go live 12:30 p.m. Eastern Standard Time. Welcome out everybody. Hashtag Team Tackle right in the chat as you come into the program here today. Let's have some fun. Let's get the community up and going with our conversations today and questions and whatnot. I'll keep an eye on that chat as we go through the show. And we got kind of a simple, fun one planned for you, though. Markets aren't really, giving us a lot of news here today, but we've got some technical reads we got to break down one step at a time, look at it from a top-down analysis perspective. We're going to go through all the sectors as we do each and every Monday, kind of get updated thoughts on rankings and where they are as we're heading in to the second week of earnings during this season. And let's welcome out the coaches here from Tackle Trading. Matt, let's start with you. How are you doing today, sir?
Doing absolutely fantastic. Excited to be here with the crew to break down the market action here today.
And Mark, how are you today on a Monday
I am
morning?
in a surprisingly giddy mood. I don't know why. Some days you just wake up, and I've come to appreciate my Mondays. I get to spend a lot of time with you guys, and I like you guys. I do. I get to do a podcast with you in a little bit.
Wait a second. Did we finally get confirmation that our older brother that I've known for 43 years finally likes us?
Yeah,
it's taken a while.
Only taken 43 years. Okay.
And I always like the market action, right?
Mark,
even during,
I've liked you ever since you were a 32-year-old man.
Well,
At least listen, I took only 32 years.
And I'm eating healthier, and I'm just in a good mood today, and I got to watch my daughter play football on Saturday. And that's American tackle football, my 10-year-old daughter. And I'm just in a great mood today. So, plus Bitcoin's down, and I like it when things go down when I'm bullish on them. I'm a weird bull. So.
You're a weird bull. You do like
it. Is a weird bull.
Yeah, no doubt about it.
Most Bitcoiners today are like, what in the world is happening? Mark's like, finally, I can finally
go down more. Go down more. I'm a weird bull. I know. I'm happy losing money in the short term as long as I got margin and lots of cash available to buy more. So
I'm not a buyer of these types of low prices on Bitcoin. You got to wait to see that form up technically, but I would be a big time buyer at another 70% clip.
Yes.
It would be the fourth in 10 years. That's all I'm saying.
Hey, listen, every time Bitcoin goes down 70%, it has been a good buy.
And I'm just saying it would coordinate with the 200-day moving average really nicely.
Okay.
I'm not calling my shot. No, that's not what I'm doing. That is
never
not. I'm just going in on Mark's. Like I'll buy it with low prices. I'm just giving him where the value would be. Bitcoin has three historical 70% downward movements in price, 65 down to 26. That would be in the ballpark. I'm just saying. That's where you would find your deep value, Chucky.
Listen, I'm a weird bull when the markets are down, when Bitcoin down. I'm a weird bull. I get it.
Yeah.
Hey, real quick, first of all, before we start dreaming about 70% corrections in Bitcoin,
we're not going to talk much about that today.
Go over to Tackle Trading real quick before we get too far into the analysis. One thing I like to do is promote something that we're working on here on the back end as coaches. Lately, we've been putting out the Huddle podcast, everybody, and I just want to remind everybody out there, if you're not yet listening to the Huddle, I dropped the link in the chat up on the top right of the Huddle podcast page. Welcome to the Huddle podcast, presented by Tackle Trading. Tackle Trading is an online community for traders to learn, trade, connect, and succeed together. Join us at tackletrading.com for daily updates, educational content, and the Huddle, which is posted.
Why can't you talk like that all the time? You should just talk like that. Either that or Alex Jones. Like that's the only two voices.
I would take Alex Jones.
Alex Jones, Tim's impersonation,
100%.
And his sultry. How are you doing? Are you ready to relax and enjoy yourself for a few moments?
I can't do Alex the way I used to. I used to have a little bit more raspiness to it, but I'm sure I could give it a shot. Anyway, listen to the Huddle every day. Give you your news in about 10 minutes and make your day a lot easier as you're getting your trading going. Matt, let's get right into it. Technical read here. What's going on in the market?
Obviously, we've been talking about this market being a little fade type action, a little drift, just grindy market as it's just been on up. We are a little overextended as you got above this 41,000. We've talked about that. as you extended previous
I believe either Matt just DC'd or I did. So Marky,
No, it was I was wondering the same thing.
So we might have had a straight old disconnect here. While we get Matt coming back on in here, you may have that audio coming rapid in. Marky, what's your read on the overall market here?
Yeah, listen, these type of runs are like massive, right? Like when you have, I mean, what it's like, what were we joking pre-production? The market, what percentage was it up in its most recent run?
It's about 7% from the pivot.
Yeah,
I mean, we ran from 3,900 to 4183. So,
and like old time investors, 7% used to be a good year, right? And there's been so many things that are just surreal about trading in the last year as a whole, just surreal. And so like these 7% runs in the broad markets, it can be, I mean, you got to put things in perspective, right?
Mhm.
And I don't personally enjoy these type of blow off the top moves as much as other bulls. I hate them. In fact, I've hated. I mean, it's been a long time since we've had one of these. The last time we had one of these was back in August of last year, where it was just relentless. I mean, I like the slow and steady grind that we had since the election a lot more, but you get what you get. You don't get to decide what the market gives you. And so on something like this, on the way up, you haven't had many intraday support levels break along the way up over the last couple of weeks, right? Update.
1 sec, Mark. I think we got Matt back. Matt, you there?
Yeah, I'm back.
I'm
I had
going
the
to
internet spike.
Yeah, no problem. We'll toss it back to you. Play a little bit baton toss here for a second, and I'll let you bring screens
Sorry
up.
about that.
Yeah, no worries. Anyway, Mark's talking about.
Yeah, it's always fun when the internet just spikes on you like that.
Oh, for certain. Well, hopefully we get to keep you here and don't have further internet issues. But Marky's talking about the nature of the grind upward. It had a really nice run, a little bit of a reprieve day here, down about what are we down? 0.7%. And Matt, what's your read on the technicals? And
my internet's still spiking on my end, guys. Yeah, you might want to share, Mark.
I'll share. Let's stay right here until we get Matt's Wi-Fi to kick back in here. So a couple things that I'm seeing personally in the charts I want to talk a little bit about. Mark, you're talking about the overall trajectory from November. I mean, the trends have been intact for a very long time, obviously. After we broke out post-election, we were holding these moving averages. We were consistently trending higher for quite some time. We had a few different periods where the market would dip and come back in, and these were battles. If you remember in the halftime report, we broke this down day by day. There wasn't always clarity as to where we were heading. This was a rising interest rate environment. People were worried about inflation, and the tech sectors have been selling off. In different areas of the market, we're telling a different story, but the market keeps battling. And here we are, first day of the week here today. There's a big earnings week as well. We had a lot of banks report earnings last week. This week, we've got a mixed bag of different companies that do report this week, including, some financial companies, but Netflix reports, Verizon reports, American Express reports. It's kind of like a little smorgasbord there, Mark. You got a little bit of everything this week. 60 S&P 500 companies do report their earnings, and here we are, a day off. So anything you want to add to the S&P 500 here, Mark?
I mean, just from a technical standpoint, it's just, what will be really nice this week as a bull is if you see intraday support levels get tested and hold, right? I mean, I think is going to be really, really key. And you got plenty of catalysts. With earnings. I mean, in fact, when going over the weekend prep that I do every Sunday night with the pro members, this was one of the lightest story periods that I've had all year. We've had so many things to talk about at different times. Really, it's about earnings and technicals this week. And so as a bull, what I would love to see is I'd love to see some intraday support level hold wherever that may be. I wouldn't mind. I would take as a bull a sideways week. But what I really want to see is some kind of intraday support hold. And we're not seeing that yet today, right? We're seeing some downward pressure, and we don't have, and this is the only thing that really concerns me from the price action, when you have these big runs up, because sentiment's there, right there. We don't have a bearish theme really dominating the market in any sense. Most of the news is generally good. It's just about technicals right now.
Mhm.
It's just about technicals and seeing the market's response to earnings.
Mhm.
And the only thing I don't like, and this is what I don't like about these run-ups, is you don't really form any support levels on the way up. Nothing that really can be counted on. And so what I would love to see as early as we can this week is intraday support to form at some point, get tested several times, hold, and that could provide a nice entry for some short-term trades if you get some broad market intraday support to hold. But we don't have that yet. And you know, so it's watching those intraday charts closely on the broad market, watching for those support levels to form. And as soon as they do, that stability, well, once support forms, it's often upwards and onwards.
Well, let's flash through a couple of timeframes here to give the chart a little bit of context. And like you're talking about here, Mark, we'll look at for some of those levels on those intradays as we get to the intraday chart. I mean, on the weekly chart, first day of the week, right? So you got the first inside red candle, just that reflects today's daily price action. But we've been up 4 weeks in a row, rallying from that 3,900 level all the way to 4,183, like we talked about on that breakout. On the daily chart, there's a couple things that I think you got to pay attention to. Number one is going to be this 9 EMA. The 9 moving average, exponential moving average right here at 41.27. Mark, we haven't even tested that during this stretch. If you look at it, I mean, price has been holding just about a percentage point above that, but basically holding that trajectory as we've been running here. And then if you go down to that intraday chart, you'll see where some of the selling has started here today. We over the last couple of trading days, like on Friday, the S&P had broken out into an all-time high and closed at an all-time high. We'd even seen some strengthening inside the internal technical chart. I'm going to watch this 4140 level as the next test. And now this is just on the hourly chart, and we are falling here since the cash open 1, 2, 3 candles in a row, coming back into that 4140 level. Into that even shorter time frame, we're just selling today. It looks like profit taking. Since the cash open, the market is down about a full percent here as we're seeing some of that price action. So it's first day of the week. There's not a lot of news out there. We'll get to the cryptocurrency news, but markets are feel like they're in profit taking mode. And Mark, I'll just quickly flash through a couple of the different indexes to give this some context. Dow Jones Industrial, very similar in character and behavior as the S&P 500. They've been working in tandem in many regards in that front. The NQ contract, which we'll talk more about, this has got a little different technical read for me. Obviously we had that pattern that brought it back under the 50-period moving average, lower pivot low, back up into a range, consolidating for some time. And Coach Matt nailed this analysis day by day as it was developing, watching for these levels, having the changing character of the chart. When it broke out, we took off. But here we are up here. Now we're hesitating and we are testing that 9 EMA. And you can just feel it. I mean, it's still in a bullish uptrend. We're still within, 2% of the all-time high here, but we're got some work here to do. There's no doubt about it. Mark, what is your read on tech? Because the NASDAQ has got a different kind of nature to it than say the S&P and the Dow had.
No, I once again, I got to go back to intraday. I mean,
sure.
I start top-down analysis, 7-step guide to trading style, where you start at the top. And if you want a deeper dive into the top-down analysis, go download the 7-step guide to trading. It's a free product at Tackle Trading. But I start at the top of the market always. And so before I place any new trades from a bullish standpoint, I have to see when you're in an uptrend, I got to see confirmation that the broad markets are at least stabilizing. And so this is where, like, when I see downward pressure, all right, I'm always going to be a little bit cautious until I get some sort of intraday support level to form. And tech, it's underperforming today. I mean, it's had a good stretch relative to other products lately. But along the same lines, that really strong run up doesn't give you a lot of support levels to work with.
Mm-hmm.
And so I really, because we have very few news stories that can serve as catalysts, because we have very few anything from a macro standpoint except for earnings coming up, it becomes so much about technical analysis in helping you make your decisions. And so let's say I was looking at a tech trade, or let's say I had a tech position. You know, you're a little bit, I mean, you're not going to be entering any new trades until you see some stability.
That's
you know,
right.
until you see some stability in the sector that you're placing those trades. You have the broad market, and then you have individual sectors, and tech makes, well, the NASDAQ makes up a good chunk of that tech, right? And we just lost Tanyan too, which means their whole internet and their whole house is done.
It must have crashed. So we've lost our host producer. I believe I'm now the co-host. Let me double check and make sure we are still streaming on YouTube here, guys. Look, I think we're still good, brother. Let's keep working.
All right, let's
Yeah.
keep talking. And so when you've had these big runs, you know, when you've had these momentum runs, and profit taking starts to occur, because make no mistake, there is not a bearish theme other than, oh, this is really, you know, this has been a good run. Maybe it's going to pull back a little bit. There isn't anything like a bearish theme driving the market today, which means that it is just all about technical analysis. It is all about judging where support does form, if it forms. Now, eventually it will, right? And then making your decisions based on that. And if you have support levels go out, well, you have to ask yourself, is it time to take profits on a position I might be in? Is it time to do a trade management decision? There's nothing wrong with taking a profit on a good trade that you've had. And on new trades, you know, for me, it is 101. It is like a golden set in the cooker rule for me. Broad markets have to show stability or upward momentum before entering new trades. And you're not seeing those intraday support levels hold yet. Eventually they will at some point. You just don't know where. And so new trades, you got to just be a little bit cautious right now.
Yep. First day of the week here, guys. The markets are off just a little bit. We're flashing through them. The NQ and the RTY we'll look at last here. It's actually off the most. And here's that Batman pattern we've been identifying. You know, Dina from the chat nailed that last week. A bunch of other people were talking about it as well. But it's not bullish until you break out at 2,300, you know, like we've been talking about. So as you're watching the Russell 2000, you really do have these windows that we're in between 2,100 and 2,300, and we're neutral until otherwise noted. Mark, it's got to have some kind of technical move from here to change that ranking. Anything on the rut that you're interested in?
No, I mean, the one thing on the rut that the other markets don't is it has a clear short-term support level that's formed over the last couple of weeks. And so you do have a support zone that the rut is coming down into to test. And if it breaks there, you could see, you know, a good 3-4% downward movement to the next support level. Yep. But if it did come down to that support level, which is at, you know, 2,100-ish, that could be an interesting opportunity to look into small caps, because you have a double bottom. That would be a triple bottom scenario. If you bounce off that, hold some stability, I love buying off support. So that's what I'm looking at for the rut. But you do have a support level that is battling right now.
Let's flash through commodities next if we can. Crude light remarkably has been holding up here, you know, Mark. And as I look at the chart on crude light, there's several things that stand out to me. Number one, the weekly chart by any stretch of the imagination is much healthier. You know, when you just look at the overall volatility, it kind of smooths out some of that daily transition and all of those kind of things. Back down to the daily chart though, and you see that it's kind of feels like it's moving into a range here, Mark. And quite frankly, you know, we don't know when the overall trend is going to hit its head on the supply, you know, as it's going to come back into the market from people like Russia and Saudi Arabia. Eventually, they are going to increase production. They've already hinted at it over at OPEC Plus and those kind of things. But I'm looking at this and it's an interesting chart, you know, and it did, I'm going to come back to the hourly. We did get a nice rally off of the lows last week, particularly throughout the later part of the week, and then holding up near $63 a barrel. You know, there's always the COVID conversation. You know, I've seen a bunch of that. I'm seeing mixed information there, by the way, about reopening themes around COVID. Half of U.S. Americans have received at least one shot of the vaccine, so that's good for the demand side. But globally, we're seeing spiking cases in India and some of these other countries that are still, you know, dealing with the challenge of getting the vaccine out to people. Mark, what's your read on crude light?
I mean, listen, I'm a fan of crude light from crude oil products from a cash flow perspective. Consolidation patterns are the most common pattern in the world of commodities. Every once in a while, you get a nice trend. Every once in a while, you get a nice trend. But man, the norm in the world of commodities is consolidation. And you have a pretty clear support level, and you've had a resistance level that's been tested. And so not only are consolidation patterns the norm, you have a very clear boundaries. And when you have clear boundaries on whatever it is, whether it's crude, whether it's gold, whether it's an individual stock, that sets up for some consolidation trading. And I've been writing on consolidation patterns in the commodities report for 5 weeks. I'll probably write on them for the next 500 weeks. There's so much to say in the world of consolidations. I love it. And there are some short-term trading opportunities. And so like if you did want to play a short-term trade, especially as a day trader or a really short-term swing trader, you have a short-term resistance level setting up. Just be aware that, calculate reward to risk, because you have a target area to take profits right above overhead.
I believe we might have our driver back. Matt, are you there?
Well, I'm here in spirit. I am. I am.
You want me to hold the screen, or you want to give it a shot?
I'm not gonna say the amount of things that I sacrificed today, but we're gonna give this one more try.
All right, let's do it.
We're gonna give it another try. I mean, why not?
Why not? Why not? Why not?
Why not? What's the worst thing can happen? The internet god shut me down again?
Matt, like I need you back, because on Monday mornings, this is where I check where the Facts of Life crew are at this point in their life, and Brady Bunch, all those, like, where are they now? At 11 o'clock Mountain Standard Time, this is where I do that, and you're not here. And so I can't, have that little, I need to know where Blair is, how she's doing.
I would not have had a Facts of Life reference in the show. If you had that on your bingo board, you probably just won bingo right there. So that's interesting. All right, Maddie, we were just talking. We went through the indexes. We were talking commodities. I was going to move on to gold next. I know we want to do a sector roundup as well. Where do you want to start? Did we lose it? Oh my, I know what that means. Third time's a charm, I guess.
Every time you ask Matt how he's doing and he doesn't answer, something electronic dies.
Something bad just happened. Yeah, we're going to share the screen. We're going to go through the markets as we go. Let's round them up real quick here, Mark, and then we'll get into the news. The gold contract, obviously, we've been highlighting this for a while. I think everybody over there in Team Tackle should be keeping an eye on gold. Long term, I mean, if you've been around our community for any amount of time, you know our belief in what gold represents as an inflation hedge and importance it has for a long-term portfolio. Obviously, since August, we've been in this downward drift. It's brought it back down into the 1700 level. We stuck support a couple of times. We had the change in character, the higher low right here, and then we started to move here on the gold chart. You'll notice that movement in gold also has been impacting the gold mining companies, and many of those have now caught the attention and been put on now the watch list for short-term traders as we get these reversal characteristics. Mark, gold's off just a hair here today, but the chart's still kind of intact. What's your read here on gold?
I mean, you have a class, and Matt's done such a great job. He's made me money on this in following, because I follow the halftime report even when I am not on it. And his analysis has just been spot on. And what you've had is, a classic reversal pattern, where, you have a double bottom, which lines up with an old support area way back from last year. And so that double bottom at a logical place where you might expect support to hold. Beautiful scenario. And then you've had great price action fighting off that bottom. Now, the one thing, and this is where like directional trading in the short term, and you shouldn't short-term trade gold anyways, but like trying to when you're coming off on a reversal pattern, I mean, you've had all of the characteristics develop. It's been beautiful. It has been absolutely beautiful. It's given me great confidence to do my naked put strategies on different gold trading instruments. Mm-hmm. But, you got to fight through a lot of stuff on the way up. You got falling moving averages on weekly charts. You got old support levels that might act as new resistance, and gold is fighting through those. It's slowly fighting through those. Fighting through. And so it's oftentimes when you see reversal patterns, because reversal patterns are my favorite thing in the whole market, period. Consolidation patterns, 2, reversal patterns, number 1. Love reversal patterns.
Yeah, and we're getting reversal characteristics in here over the last couple of months, obviously. Yeah.
Yeah, and so when you get a reversal pattern, the one thing you have to understand about reversal patterns is that it's not to oh my gosh, it goes to the moon, like, right? It's oftentimes sludgy. It's fighting its way through. So it's not uncommon at all on its way up to have red days at all. It's just because there's lots of technical barriers, and you still have shifting sentiment. People are getting encouraged, right? But you don't have those like, oh my gosh, momentum traders and everyone taking. Bottom line is, I love it, especially from a cash flow perspective. When I get a classic reversal pattern, I love it. It gives me confidence to sell naked puts, because even if price comes down, I have a great support level to work with, and it gives me confidence to maybe start entering into some longer term position trades that I may or may not cash flow from a directional movement. Just realize that it's a battle on the way up. But boy, it has been a beautiful reversal pattern. We've been all over this one at Tackle Trading here on the Halftime Report in our other content.
Well, and one thing I'm going to be watching on this reversal pattern, as it did break out last week, broke out on Thursday, is how it responds to these moving averages as they roll up, Mark, because you know how charts work. Once you finally get higher pivot high, higher pivot low characteristics, you'll see these MAs kind of roll in.
Yeah, and since we're talking moving averages, go to the weekly, weekly candlesticks, because like, I love that you've started to clear weekly moving averages, but realize you got some others that you're going to battle through. And I don't know which ones you have, the 9 and then that 20. And so you got the 20 weekly, which I oftentimes refer to as, the most underrated indicator in technical analysis. It's very normal for it to hesitate at a falling 20. That's just normal. That's just normal. And so I wouldn't be surprised to see some hesitation here. You got, but overall, from a cash flow perspective, it is the best scenario gold has had in, I don't know, 6 months, 7 months. So
correct. There is some work to do, though. I mean,
that's the thing. Is just don't expect don't expect a V shape anything.
It's got to battle.
It's going to battle. It's going to be sludgy, but I wouldn't be surprised if gold wins this battle after that classic reversal pattern.
It's going to be a fun one to watch. Obviously, off a little bit here today. I actually hit a new higher high on the daily candlestick, though, so we're only down about 0.46%. Copper is resilient, Mark. One of the charts that grabbed my attention this morning. Freeport-McMoRan Copper and Gold does report earnings this week. Very popular company.
You've seen in crude oil and in copper, after taking a month off, you've started to see some life again, and that's very interesting to me because of the effects it can have on a lot of tackle trading favorite reopening, cyclical, reflation, whatever you want to call it, and they've taken, that whole value trade has taken some time off in recent weeks. But the favorite part of that value trade for me, which is the copper oil aspect of it, you've seen some life. You've seen some life here, and breaking out of shorter term, multi-week resistance levels on both of them. Very interesting. In FCX, which you mentioned, boy, I would love one more pullback in FCX. I don't think I'm going to get it. Maybe, you never know. But a pretty clean resistance level that it's fighting against.
Pretty fat red candle here heading into their earnings report. Earnings comes out on the 22nd, but I'm going to be watching that report, see if we can catch a breakout, see how the price response is here, because we've got
you catch your breakout. I would love to play it off that support level.
That's right. Just different styles, in that regard. A couple more here as we're working through the markets. Let's take a look at the dollar. The dollar, Mark, who knew?
Things are going to crap when I'm here to analyze the dollar. But from a technical perspective, go to that weekly chart. I think that weekly chart's a lot. Like I think.
Okay. Well, there is the difference on the ETF and the index, right? So here's the ETF, and you'll notice
Give
3
me
weeks
the
in a row.
index.
The dollar.
That's right. I'm driving the dollar ship at Tackle Trading. I think the index on the weekly candles, daily candles too. I mean, both of them very, very, very telling. Like, you had a couple weeks where the dollar was rallying, but it has been a bloody bath with intraday support levels. And this is why intraday support is so critical. And this is because if it breaks or if it doesn't form, this is what can happen on whatever it is.
Mm-hmm.
And you've just had a constant break. Sometimes it will take a couple of days off, and then support will break and break and break and break. And at no point on the dollar have you had a steady week-long, multi-week support level form along the way, and it just downward pressure begets downward pressure. It's why technical analysis can make you succeed as a trader. Smashing the buy button, that is so 2020. We're turning back into what our normal market conditions. And in normal market conditions, technical analysis is king because things can go down and support is critical in that. And of course, as you're watching here, I mean, the euro is rallying, in that inverse relationship with the dollar with nice clean technical conditions.
It sure is. In fact, so many of the cross pairs, I mean, you look at the index is the basket against all currencies. One of the reasons I wanted to come to the euro is this 1-2 level is something technicians, Matt was talking about this significantly last week. You'll notice the dollar breakdown corresponded with the euro rally here. European Central Bank is set to meet a little bit later in the week, but you have this strengthening global currency theme that is developing right now, Mark. And Mark, what does it mean if you get a weak dollar for a long period of time? It's going to benefit asset classes.
It is going to benefit asset classes. Now, the dollar collapsing and not becoming the reserve currency, that's something I could talk about for hours. That's probably not good for individuals that live here in America. But for your assets, especially your short-term and intermediate assets, a falling dollar helps them all. A falling dollar helps them all. Precious metals, commodities, stocks, falling dollar, good for asset classes.
Let's talk Bitcoin next here, guys. And a couple things on this Bitcoin chart I find fascinating. Number one is this the difference in futures data versus, continuous data in Bitcoin. Bitcoin is one of the only markets that does trade 24 hours a day, 7 days a week. It does not take a day off there, Marky. So over the weekend, you might have had your Saturday barbecues or your Sunday morning brunches and all those kind of things. Bitcoin was trading and it was selling. In fact, at one point, Bitcoin traded down to $55,000. Here we are right now. And it
was down to as low as 51, I think, at some point this weekend.
Mm-hmm. Yeah, it's selling. Let's just start with that. It did not hold the resistance zone. There's a couple of different stories or news items, Mark, that you and I spent probably 30 minutes this morning basically just saying, it feels like the market's guessing as to why this thing is selling. We had
here's the thing about price action, and we make fun of this all the time at Tackle Trading, whether it's Market Watch or CNBC or whatever. Mainstream financial media, which are like laughable if you listen, and I seriously, I honestly believe that they have to have causality to explain price action. Mm-hmm. You see it all the time. Market up on stimulus hopes, they're always attributing. It's why the yields got so much play for a couple of weeks, right? Markets going down. Well, why we have to find a reason, and they have to attribute causality to price movement. That's what they do. Now, when they don't know, you never see a CNBC or Market Watch or Reuters or Bloomberg headline says, market up, market down. We really don't know why. You don't see that.
No, they always try to give causality to it, even if they don't
always try to give causality to the price action. Correct. And so on Bitcoin's down. And so what is everyone doing?
Trying to figure out why.
Why is it down?
Yep.
Why is it down? You know, why is it down? And so people will come up with reasons. They'll come up, well, Dogecoin was up big, and then you had margin calls. The Fed is looking in the Treasury is looking into cracking down on this. Turkey banned crypto transact. You know, they're guessing.
Mm-hmm.
Plain and simple fact is, I am shocked this doesn't happen more often in Bitcoin. I'm shocked that it doesn't happen more often on an asset class that has ran up, what, since November, 500%. You know, I mean, those type of massive moves up percentage wise, there's usually lots of hiccups along the way. It's why I hate chasing price other than a really short-term momentum standpoint. But from an investing standpoint, people that in Bitcoin, they do, it's one of two things. People trade it because they want to ride the gravy train of whatever the hot momentum is, right? Why did Dogecoin go up as much as it did last week? Because people are riding the momentum. How do I make a fast buck? How do I make a fast buck? And listen, there's nothing wrong with that. Momentum's a powerful thing. Momentum can make you money in trading. It can. Momentum's great. So there's trading, and from a trading standpoint, the technicals are blown up on Bitcoin right now. Breakout failed. You don't have higher lows anymore. You're coming back into a consolidation pattern, and so you're going to have a lot of price action play out from a short-term trading point of view.
And I came over here to FinViz on this chart for 1 second, just because I wanted to show that, because on the futures chart, we see a gap, right? But it wasn't a gap. I mean, it just gapped in the futures market because the futures market closes on Friday, opens on Monday. Throughout the weekend, that technical breakdown did occur at that 60K right there on Saturday night, you know, and it went right when the Asian markets were open. The European markets were just opening up, and then boom, here we are, and it just dropped it all the way down to 52K. That little flash crash was on the backs of some of the speculation around the Treasury Department regulating some of the financial transactions, stuff like that. There was some rumor about China losing internet where they were mining crypto. India, again, got popped into there. I mean, people were trying to find causality. The reality is here we are. We're on a technical breakdown. And the important takeaway, quite frankly, for everybody out there is this changes the character of the chart in the short term.
From a short term and technical analysis, the nature of the technicals have changed in the short term.
That's correct. Yep.
You know,
we had a breakout. We were attempting to hold the breakout. We did not hold the breakout. That's a failed breakout.
And let me show you a chart. And I'm the only individual on the planet Earth today that is going to correlate eBay to Bitcoin. It's the only place you're going to see it. From an ideal stand, go to a weekly candlestick chart. Go to a weekly candlestick chart. So
we'll give it a shot. Maybe eBay doesn't like that.
They're like, no, you will not correlate eBay to Bitcoin. Okay. All right. So we had a breakout. You know, you traded sideways on eBay for a while, and then you tried to break out of a resistance level, only after a couple weeks to be violently thrown back down into the old range of the stock. And you had 3 down weeks on Bitcoin. You had 1 down week and then 2 violent weeks down. This is what I would love to see on Bitcoin. And I always get like violent movement down, violent movement down, support hold, and then the climb up. I love the second breakout of a level. Now, every chart is different and every characteristic of things are different. But it just like when I was looking at eBay yesterday, and I like the current setup on eBay coming into this week. If the markets will help. This is why top-down analysis is so important. But you sometimes have breakouts, and it can feel like the end of the world, right? Violent pressure down, and when a breakout fails, and this is the main point I want to bring up on eBay, when a breakout fails, the short-term price action can be violent because you have a lot of individuals that are entering the breakout, a lot of short-term traders entering the breakout on something like Bitcoin. It broke out last week and so much euphoria. And then when it fails, the short-term price action can be relentless to the downside. As momentum traders get out, as short-term traders get out, as people that are over leveraged panic. And so in weeks from now, we will likely have a new setup on Bitcoin at some at some level. Now, I don't know where that new setup starts. Does it start today? Does it go down to 40,000?
I'll answer your question on the first one. It doesn't start today. And it could, looking back, hindsight's 2020.
Hindsight.
Yes.
But do know on a failed breakout, and this is whatever it is, like those individuals that I'm going to go buy the dip, right? Listen, I get it, right? But normal market conditions and normal technical analysis, failed breakouts can be pretty violent in the short term.
Mm-hmm.
Now, at some point, a new setup will occur. At some point, a new pattern, but you're probably looking at weeks and weeks before that new concrete pattern develops. Now, I'm fine. Like, I'm a long-term Bitcoin bull. I hope this freaking thing crashes to 20,000 to 15,000. Now, I am down on all of my Bitcoin positions today. In that scenario, I would lose a lot of money on those short-term positions. But man, I believe in the Bitcoin theme, the long term. Institutions more and more keep adding. I believe in that institutional adoption theme. I just want a cheap price to load the truck up. I just want a cheap price to load the truck up, which means I'll probably never get it, which probably means I'll never get it.
Well, in the life cycle of Bitcoin, it has had plenty of times where it did drop.
But from a short-term trading point, you gotta be careful. Whenever you have a failed breakout, whenever intraday support levels give out, whether it's broad market, Bitcoin, crude oil, anything.
I agree.
Be patient. Be careful. Every down day isn't a buy the dip opportunity.
Mm-hmm. Let's run through the sectors next if we can here as we're working through our day on a Monday. Welcome out to the halftime report, by the way. Saw the chat lively. And as always, those of you who are veterans and come in here every day, it's always great to see your names.
See, now when Mac does sector analysis, this is where I check where the different strokes cast are, No,
I'm not going to do that today.
And I want to hear in chat what your favorite 80s sitcom was.
My favorite 80s sitcom was Cheers. I liked Cheers.
Cheers was a good one.
Cheers was a good one. All right, let's run through the sectors here, guys. The S&P 500 on Friday hit a record all-time high and closed up for the week. We did upgrade the S&P to a 10-yard marker, reflecting just the overall incredible bullishness of this market. We're aware that we're overstretched and all those kind of things. But when you're holding above the 90 EMA on momentum, you've got to reflect that. Our top ranked sector, materials, okay? And the materials sector has been an incredibly good, strong performer here recently. Breaking out last week, we did move that up to the 10-yard marker. It's the number one ranked sector we have at Tackle Trading. So much in this space, by the way. The chemical companies are looking good. The gold mining companies are starting to play that reversal characteristic. We're seeing the likes of, say, like the Albemarle's, or the Newmont Minings, reversal characteristics coming back up the chart, those type of things. We also still like steel. Cleveland Cliffs, one of our favorite companies, does have earnings coming up here pretty soon. But materials in general, we got it at the 10-yard marker, strongest rated sector at Tackle Trading on the backs of that trend. Some that we kind of all got bunched up. This is where the strength of the market is, Mark. And XLF, the financial sector, guys, breakout. A lot of bank earnings started coming in. We saw Goldman Sachs crush it. We saw top line and bottom line beats across the board. Even traditional banks like Wells Fargo had a really, really good week last week, reversing, breaking out into those new high points. So financials we have at the 15.
Go back to Wells Fargo. I love it when you have negative market environment and a stock is fighting that. I think that relative strength. Now, I still, as a top-down analyst, don't enter because, I want to make sure that everything's aligned up on the thing. But I take note. So.
Yeah. I think a lot of people took note of Wells Fargo last week. It was not on my radar necessarily, and it's taken off and shown some strength there. XLI, the industrial sector, Mark, this is an area that's just been a juggernaut for a long time. We've got a 15-yard marker ranking.
These three sectors. Whenever I prepare for a week, I'm always like, I go through different market scenarios. All right, what if the market takes off? Like, what if you have the last couple of weeks? Do I got short-term exposure that takes advantage of that? And then I'm like, all right, what's on my wish list? And I'm sorry, I am a believer in the reflation trade. I think it's taken some time off. I don't think it's been hot. I think it makes too much sense. You got a hot economy, things get back to normal. I think there's another leg up in the reflation trade. I don't know if there's two legs up, but I think there's at least one leg up. And from a cash flow perspective, so these last three, and so if we had a big market dip for whatever reason, right? Let's say it spins out of control in the short term. You know, what's on my wish list? Well, a little bit of banking, a little bit of industrial, a little bit of material are 1, 2, and 3 for me. The last three sectors you highlighted.
And then the other two that I would put up there with that space there, Mark, is we've had the tech sector, made an incredible comeback after, being kind of pressured like the NASDAQ was, very similar pattern as the NASDAQ 100, reverted, broke out into new highs. That's at the 15-yard marker. It did catch a 10-yard upgrade. We maintained on staples. We love staples right now.
I mean, staples it has just been strong. It has just been strong. There's no way about it. And you look at it today. Once again, poo-poo day in the market. Staples holding its own.
Well, let's look at a couple of the stocks in the staples sector to kind of give
Go to
people
Walmart.
an idea of what we're looking at. And actually, let me bring this up. Here's your 33 companies in the consumer staples sector, and I'll organize it based on market cap, give you a quick peek as what we're looking at from the bottom up. Companies like Walmart.
Hey, will you just show how you get to there if somebody wanted to do that? Because I think this would be like...
Inside the newsletter at Tackle Trading, if you come down here, there's these yellow boxes, broad market sectors. So you can pick any one of them that you're interested in looking at the components on, like we were just looking at industrials. And I use the control click, Mark. I'm a tab guy. So I've got my tabs open here. Now I can filter it for all kinds of different things. These are the companies inside the sector ETF in the S&P 500. So with industrials, then I can see the biggest components like UPS and UNP and Deere and Caterpillar, all showing me incredible strength. 3M and Lockheed Martin, so on and so forth. And I did that with staples here so we could take a peek at what's going on in the staples sector. And we just like the characteristics. The biggest of them, okay, the Walmarts, the Procter & Gamble, the Coca-Colas. Coke had earnings today. We'll talk about that. Reversals off of the lows over the last month and a half. Reversals off the lows. Strength in Pepsi. Re-strength in Costco. But then you still have like Altria testing a new high. Philip Morris testing a new high, Kraft Heinz, Monster Energy Beverage, all these kind of things. You've got pretty healthy patterns from the bottom up analysis in the market. And so that's where that sector, that sector ranking, we like where it is. We like that 15-yard marker. We're going to keep it there until that pattern changes. Might even catch an upgrade if it continues to strengthen.
Yeah, no, and this is one area of the market because I'm not a tech guy. I'm just not. Know your coach's bias. Know the person talking to bias, and I'm just not a tech guy at all at the valuation levels that tech is at. Staples is one area that I have some buyer's remorse over the last month because I was like, yeah. But I don't think you can ignore the strength. This feels like an area that has room to run. It feels like Staples is an area that you look back on 9 months from now, and it has had a nice year. Now, these, Staples is never going to have this momentum, cleanest charts, and it can go through these long periods. But if you look, go back to that period.
Here's your weekly chart.
Yeah, there you go. It can have stretches, and you look at that stretch it had in 2019. There are time periods. Where Staples can outright trend, and good old-fashioned trend, a nice steady trend. And we're a little overextended from weekly moving averages, particularly that 9. But if Staples takes some time off here and breathes a little bit, Staples can trend. And it feels like you're going to look back 9 months from now, and you might not exactly like the path. It's not going to be the prettiest path, but I think you're going to like where Staples ends up 9 months from now. And so I'm definitely interested in some of my favorite staple plays. You go look at that Walmart chart, and it hesitated at the 20 weekly, couple weeks, which is very normal. You have a very clear resistance levels, taken some time to breathe. Give me another week. Give me another 7 days. Look at Pepsi. and I had to, deal with like CNBC, like pimping Pepsi out for like 2 straight weeks where they were talking about 1 million. Pepsi's great. Pepsi great. Beautiful support bounce it had a month ago. Real relatives. Pretty chart if it can take some time off and eventually break through that resistance level. Staples overall, when you look back for a year time in 2019, had a great trending year.
Mm-hmm.
It just choppy a little bit. So the more these things breathe, I just think it's a boring part of your portfolio that you'll look back on 9 months from now and you'll be like, oh, that you won't say that's the greatest thing ever, but you'll be like, nah, not too shabby. Not
Sure.
too shabby. Not everything in your portfolio has to be excitement a minute, right?
No, steady trends are always welcome, and Staples developing nicely here. We like a lot of the charts and those components. 3 quick ones, all at the 20-yard marker. XLC, we maintained after a week of consolidation after an upgrade the week before. Healthcare actually caught an upgrade as it should have. It went up from, I believe, 10 yards, from the 30 to the 20, and that's off of the breakout here. We saw a lot of strength in the healthcare sector last week, so we did upgrade that space. Discretionaries caught an upgrade as well. And you'll notice very similar chart to the one tech had, pressure during the month of March, back up, higher pivot low, eventually a breakout, then a breakout into the all-time high. Discretionary sitting on the 20-yard marker right now. Real estate, yeah, strong, and we're bullish. We got it at the 30-yard marker, but it's a defensive area, kind of a grinder. So we've got a little bit behind.
Defensive area is up today.
And yeah, holding up.
Defensive area is up today.
Mm-hmm. And then last one, energy, our lowest ranked sector. It is very, very simple to see all those charts I just went through, strength, trends, breaking into new highs, a lot of components developing. Energy's just stuck in the mud right now, Mark. And I think a lot of people are waiting to see which way this thing's going to go. Break to the upside obviously is going to give clarity on a lot of those charts, but we are not there yet as it is testing between this consolidation zone over the last month. That's your sector roundup here on a Monday. And as always,
one last note on energy, if crude oil continues to show strength and upward prices, at some point, energy is just going to, the momentum's going to, the sentiment's going to shift in the short term. It can fight it in the short term all at once. Mm-hmm. But the nice thing I like about XLE, and I really like it, you got clear support and resistance areas. You want to wait for a break into the direction, great. You want to play the consolidation pattern, great. It has, for traders, there's a lot. I love tight consolidation patterns a lot.
Yeah, and it is developing in that fashion right now. All right, guys, a couple of corporate items I wanted to get to. Then I believe, Mark, you've got a couple of trash that makes cash stock ideas for the end of the show. Start with Coca-Cola. We talked Staples a minute ago there, Mark. Coca-Cola came out and reported earnings here on a Monday morning. Not many companies report Monday before the bell. Coke is one of them that does, though. And as you can see, Cocoa's up about 1% here today. 3-year weekly chart smooths out these staple companies so much. You can see we're testing this 55 zone, looking for a breakout here. Pre-pandemic, we were up at $60 a share. We're not that far off. And this is the kind of company, it's a global brand. It requires global demand. This is not just a US-based company. They do business all over the world. And, the pandemic did hit them hard, just like a lot of different companies. But you know what, Mark? They did come out and beat 55 cents on the estimate of 50 cent EPS. They beat on revenue slightly as well, 9 billion in revenue compared to 8.6 billion they're expecting. And a lot of positive commentary from the CEO about reopening themes in the market and getting the vaccine out there. And he's optimistic moving forward. They even reaffirmed their full year guidance. Mark, read on Coca-Cola here if you got one.
It looks a lot like Pepsi, right? Like you got a resistance level right overhead, playing a breakout heading into that. So whenever you got resistance, once again, these aren't the greatest swing trading products ever to be created in the first place. More position trade, more long-term investing. It was a decent earnings report. Listen, we've had a lot of decent earnings reports, and we've had some great earnings report. I think it's going to be a great earnings season. I don't know what the market's response to that is going to be, but I think overall is going to be an earnings season where people are like, yeah, companies are make money. I think it helps. What I think this earnings season will do at a minimum is if you ever get a correction, people will be like, earnings aren't too bad, and it will put a floor in sooner than it would otherwise.
Coke's a better investment vehicle, right? Long term, it's not a great trading vehicle in many ways for like quick hit or swing trade stuff like that. Can't imagine somebody day trading too much Coca-Cola. But if I'm looking for something, Mark, it's got to break out of these highs on the weekly, doesn't it? I mean, if I'm looking for a momentum type of situation.
Yeah, I'm a play support kind of guy on Coca-Cola. I love playing support on dividend companies.
Sure.
I can calculate my dividend yield. I have a support level, and now we're in the upper end. I mean, you have to, patience in staples companies is warranted. Yes, because every once in a while it will go parabolic for a few days, then come crashing down. Be patient on your setups on staples, because you got time to watch grass grow here.
I agree. Hog, Harley Davidson. Mark, have you ever wanted to own a Harley? Get that, wind in your face?
Listen, I'm going to buy a Lucid or a Tesla.
The
next purchase I make is going to be an EV company.
I'm going to tell you right now, though, people who love Harley love it the whole way. One of the most loyal brands out there for consumers who are big fans of it. And actually, Harley came out and they crushed their earnings. We have a gap out here. It's kind of hard to see that candle until I highlight it, but you'll notice right up here is that red candle gapping out. We started Friday, we're at $40 a share. Here we are at $44 a share, up almost over 10%. And they just crushed their earnings numbers.
I think one of the things, when you look back 5, 10, 15 years from now in the history of the market, one of the reasons I think earnings, even in the face of so many reasons, I still have short-term exposure. I think there might be a market dip, and I have cash available, and I'm building cash for that for long-term investments. But I think earnings is going to be outstanding. I just don't know the market reaction. And when you look back 5, 10, 15 years from now, I think companies in the pandemic took advantage of that and cut costs dramatically. They leaned up operations dramatically. I saw this, in analyzing oil companies in depth. That's why I'm so bullish on energy companies for the first time in a long time. I think companies really, really, really use this opportunity in the pandemic to streamline costs, to cut costs, to become more efficient. And I think we're going to start seeing that in earnings reports. Earnings have been outstanding. That was a smashing earnings report by Harley Davidson. No mistake about it. Hawk hasn't been on my radar for a while. That was just a good, solid earnings report, and expect more of the same.
They almost doubled their EPS estimates. I mean, they were estimating 87. They came in at 168.
And I don't think, and once again, I'm seeing, because we always joke, and there's some truth to it, that people lowball earnings estimates just to create beats, to create this whole companies are beating, and there is some of that manipulation going on. You're having outright smashing beats that are true surprises. Don't be surprised to see Harley Davidson form an uptrend after this.
Dina asked a question in the chat I think is interesting. Could you imagine a Harley EV? Is this the next EV company here somewhere down the road? Motorcycle maker that chugs a lot of gas? Maybe. I actually, with Jabil, I could imagine them coming out with some version of some e-version, electric type of vehicle. We'll see. Right now, that's not what they're selling. As a matter of fact, they're selling their traditional names. Harley's not moving in that direction, at least at this point, based on what the CEO had to say. They're wanting to go, and I want to get this exactly right. Okay. They're moving into their bigger, type of units. Their hardwire strategy is what they talked about. Heavyweight bike segment, that kind of stuff. I think they're going the opposite direction right now, Dina. And the people who love Harley are probably loving that as well. They want that traditional, tough, motorcycle, that traditional brand of Harley. And they did come out and they had good revenue year over year, 9.8% on a year over year basis. The revenue grew. So
it was an eye-catching earnings report that put Hog on my radar. Now it's just about you look at it from two things: investment standpoint and a trading standpoint. Either way, I think you want to see price action play out a little bit. I think you'll have a pattern and a setup sooner than later, though, on Hog.
Yep.
I don't think you're going to have to wait like on Staples to watch grass grow. I think you're going to have a trade setup sooner than later.
Couple other quick ones here. Peloton. They had an incident with one of their bikes over the last 6
horrific.
months, and there was a kid that died, I believe, from it. 39 different incidents of this type of bike they call a Peloton Tread Plus. The U.S. Consumer Product Safety Commission actually is now recommending to stop using the Tread Plus if you've got kids or dogs or stuff like that. Peloton, obviously, in their statement said that the information was overblown. They're very sad about it, but they did not confirm that they thought it was false and misleading, quote unquote, as to what the Consumer Product Safety Commission said. Either way, here's a company that's off its highs from 170 all the way to 106. We're in a little bit of a consolidation here. I don't care much about the stock price right there, Mark. That news obviously concerning if you are a Peloton user.
Zero interest in this company.
Yeah, me neither. Gamestop, another one who's been in the news a bunch. It was up almost 10% earlier. It's up 6% now. Interesting reversal characteristics, actually. Looking to try to form a base. A couple things happened here. Number one, the CEO finally did step down. We knew that they were going to do that. George Sherman, now I've learned the CEO's name. He's leaving in July, and he's leaving so they can bring in some hot young gun man or woman or, to come in and run this company into the future, Mark. They're looking for that type of person who can do the e-commerce type of transition in line with what Ryan Cohen's been proposing on their board of directors. That's it. All right. Last ones here. Tesla also had some bad news. A couple people died in a Tesla auto crash over the weekend as well. Stock is actually looking very good on a technical setup, I got to tell you. But fatal car crash, I believe, down in Texas. 2 people did die. Not fun news today here, Marky. No, not fun at all. And let's see here. Do I have any other companies in the news I'm interested in? We had a couple of upgrades. First Solar caught an upgrade, kind of stuck in a range as well.
And I think on solar, and you could go to CSIQ, you could go to First Solar, you could go to a lot of different solar companies. Mm-hmm. It's about, you do have, they're a little bit weird charts. Sentiment is down in the space. But man, you got some support levels that are looking to form, and it's all about sticking them. So solar's caught my eye, but it's just waiting for the specific reversal signal I'm looking for. I don't think solar's done this year. I think it will have its moment again.
Yeah, I don't think it's done either. I think it definitely will have a moment at some point. First Solar caught an upgrade, I believe, over at where was it? I usually have my news source on the other side. Citigroup did upgrade solar. They like FSLR. We like CSIQ. Got earnings coming out a couple weeks here. Other than that, Marky, there's not a lot of news outside of the stuff that I've already gone through. So why don't we do this? It's Monday afternoon. We always do this. Why don't we move into trash that makes cash and hear about a couple of your trading ideas that you got for this week's segment?
I'm a big fan of doing what works and going where stability is and what's hot, what's not. And at the start of the year, so many of the cheap stocks. In fact, I shared this stat with pro members several times. The best performing stocks in like December and January were stocks under $2. The next best stocks under $5. The next best, well, that's shifted, right? Now, I don't take time to, how do I phrase this? I think everything has its cycle. Everything has its turn. But I'm not going to blindly go after an area of the market where I'm like, it's out of favor right now. I'm going to wait for technicals to form. And I think there are certain stocks under $5 that I think will be amazing opportunities. But I still think there are great opportunities in commodity stocks under $5 if you're looking at those. I like the stability in the commodity space as a whole. Give me a look at natural gas. It's been a long time since we looked at natural gas on the chart. You have breakout characteristics from a short-term perspective, breaking out resistance. And I've been talking about this on the commodity report about the reversal pattern forming on natural gas in the short term, coming in at a short-term support level, forming a classic reversal pattern. And I like that. And so the pick I have, go to CRK.
CRK, so Comstock Resources, okay?
No, talk about a year-long consolidation pattern. I love these things. What I love, and so we've had stocks that are cheaper, small cap, some of the cheaper stocks, they've been getting punished the last several weeks, getting punished. And I like the divergence. Now, Comstock Resources is a natural gas producer. They do a little bit of oil, if I remember right. But as you can see from the chart, that looks very natural gassy, right?
Mhm.
And what I love is that when you get a divergence in the price of an individual stock and the price of the commodity itself. For example, if oil goes to 70 bucks, but energy stocks are going down, I'm going to get really excited for the reversal in energy stocks themselves.
Mhm.
Because while sometimes there's correlation, sometimes just market mood and sentiment is really, really funny. And so when I get a little bit of divergence of an individual stock going one direction in the short term, and if I understand why, cheaper stocks have been getting beat up lately. So I understand the why it's getting beat up. And I have the underlying commodity showing potential strength. I like that situation a lot, whether it is a $4 stock or whether it is a $400 stock. I like it when there is that divergence, if it makes sense to me, and it makes sense. Cheaper stocks have been getting beat up, you have a little bit of downward pressure here, but you got natural gas showing nice reversal pattern off a potential support level. So I like the divergence. The other thing I like about CRK is, you've already drawn it, right?
Mhm.
You got a support level that's been tested over 5 or 6 different months.
Couple years, actually. This goes back to 2018 right here.
So you have a support level that anybody doing technical analysis 101 for the first time could be like, yeah, that's support. So right now there's not a setup today,
Mhm.
but I like the development here of what is occurring. I understand downward price pressure makes sense. Cheap stocks been getting beat up, so the downward pressure makes sense. I got a divergence in natural gas itself. I got a support level for the ages that I can help manage off of. And so while there is not a setup today on CRK, it is one of those, oh my gosh, when I was like looking for trash picks this weekend,
Mhm.
I was like, I like where this might be a week from now, 2 weeks from now, 3 weeks from now. For example, let's say the market just sells off and everything gets bloody.
Mhm.
But natural gas is doing its thing. Oh my gosh, give me a blind bet at support in that case. I could also see support forming at a higher level like it did back in January, where you didn't quite get down to that support level, but it hung out for a couple weeks, right? And so you had a little support level forming right above the major support level. And then you had a nice short-term trade. Definitely on my radar. It's one of the opportunities in trash that I've really liked a lot for the first time is in the development of it. And so CRK definitely on my radar. What do you think there, Tim?
Well, I do like the tie into the commodity analysis. This is something that you're relying on one of your strengths here. You think through the business model, the underlying causality as to why something might behave or perform. CRK has been drugged down with many of the stocks under $5. So many of these companies, Mark, that are down here, they literally are just trash charts right now. I did my scanning, today to try to
It's
find
been a relentless assault on the area. But when I see a relentless assault, I'm like, that sucks for my existing positions. And then I look for opportunities.
Mhm.
I love it when an area of the market, it's like when you were flashing through Staples earlier and I saw Altria at a really high price point. I was like, I miss selling naked puts. I remember like touting Altria when it was down in the 30s, and I was like, I like this. I like naked puts. I like adding here because I liked the dividend yield and the long-term story and understood the price action. And so when things get beat up, I'm like, all right, well, short-term trades, I'm going to hold off, but I start scouting opportunities.
Mhm. Yeah, and so I do like the correlation to what you're talking about with natural gas here and CRK. As I come back and look at the chart, obviously they're not correlated in the short term. Your belief is the strength in natural gas will eventually provide some profitability for this company and start to make a comeback. So it's not a short-term trading idea. You're watching this as a watch list pick. so that as it comes into support, if we can find something down here, build a higher
Yeah, I
pivot
actually
low,
with the
something along
strength
those
in
lines.
with the weakness in cheaper stocks overall, you're probably going to get to that support level. But if you see that pattern developing like you did in January, if you see a support level form along this classic, that's where I'm going to get really, really, really interested.
I think it's fine. Yeah, it's not my kind of play. I think you would know that. You know me well enough to where I'm going to look at a chart like that and say it's not there yet, but you're not saying that it is there yet. You're actually, your analysis is give it some time here, guys. I like the correlation to what natural gas is doing, and I believe that will impact CRK at some point.
Yeah, and what do you, I mean, I know it's not trash, but since we're on UNG, what do you think about UNG's chart? I've been saying the last few weeks on the commodities report, there looked like there was some directional opportunity in UNG for the first time in a long time, you know, from a short-term trading standpoint.
Man, I'm a scorned lover.
I know, right? Listen, but I understand.
Like that stuff back in 2019, I haven't traded it for almost 2 years now, Mark. I just stopped. You know, when it went parabolic the way that it did, it wiped out that option sellers.com or whatever it was. Shortsellers.com. And then you'll notice that it came back to reality. It's been in a long-term downtrend, and I've just kind of gone away from this product as a cash flow instrument. I used to use it all the time. I mean, at some level, obviously, I would be open to somebody talking about nat gas as a potential ETF play for cash flow. But it's just, I've been a scorned lover. I've been avoiding it, finding other areas in the market to trade just because of that for almost 18 months now. Maybe I should be open to looking at it again, but as of this point, I'm not.
No, I mean, I've been covering this, and I mean, UNG. I mean, for so many months in natural gas is like, eventually there'll be something to see. Eventually there'll be something to see. Eventually there'll be something to see. About 3 or 4 weeks ago on the commodities report, I was like, there could be something to see here, and I've been following it, developing it. And once again, is it the most exciting thing in the world? No, but once again, every trade. I mean, how many things that are down in your portfolio today would you be like, I could use a little less excitement, right?
You don't need exciting everywhere. That is absolutely true. Any other trash picks?
MUX. All right. Now, McEwen Mining is a silver producer. They do a little bit of gold. But you know, primarily a silver producer, and silver has been stuck in the mud for what seems like forever. Not surprised, the McEwen. McEwen, and I like little, you don't have very many cheap silver mining plays. They're very few, because most mining plays, there's a lot of precious metal companies under $5, but very few that are primarily silver. And investing note came out of McEwen today, where they said that their production is expected to increase over the balance of the year and be 20 to 40% greater than 2020. So, you know, and that came out today. That came out this morning when they were giving a quarterly update. I think their actual earnings is in 6 weeks or so, but you know, where they'll report numbers. But they said, listen, we're expected to do about 20 to 40% more in production this year. Now, that is a substantial amount. Especially if you're a silver bull like myself. And so I think there are a couple ways to play McEwen. And once again, world's the most exciting stock? No. But I think there's opportunities. One, you could have a breakout. I think you have a pretty clear breakout level if resistance starts. Now, that's not going to happen unless silver gets going itself. But once again, much like CRK, man, you got some massive support levels on McEwen going back for a good portion of the whole year. And so, I mean, you got massive support levels, you know, so you have the March lows on COVID, right? But outside of that, I mean, you've held support levels. And if you look at higher lows as a series of ranges, like, you know, because oftentimes from technical analysis, we look at higher lows as, you know, here's a higher low, and then there's a candlestick with a higher low. But if you look at it from a series of ranges, your ranges of support have been slowly building a little bit. I find that very interesting. And so if you're the type of individual that likes to play off support, you got plenty of support zones to help judge, and you also got a resistance area. So McEwen's one of those cheaper stocks I follow. Loved the, hey, we're going to increase production. Silver prices have been steady. Even if they don't go up, they've been steady, which makes a company like McEwen with increased production, potentially representing some potential value if they can hit those production goals. Love the technicals, like the note from it. So McEwen Mining, the other company that I have in this area today.
Yeah, it looks like a position style trade based off of a trigger on the daily chart here at about 1.2. Now you got a couple of things here, just as I think out loud about the potential pick here, Mark. I do like the characteristic in rising support over time. Yes, I do like that. I do like reversal characteristics here, and I got to get enough time on this intraday to find some of those old pivots. Yeah, we had a tail at 122, but this is non-market hours. You'll notice the lighter gray section here. This was when it was trading non-market hours. I got a little tail here, first hour of the trading day on Thursday. I actually think I would trigger probably just above 120 right here. If I want to give an extra 2 pennies, fine. You've got several obvious targets here. 130 would be one of them. Then the other one's not so obvious, probably all the way up in this 145, 140, 145 range longer term. You love the characteristics of rising support through these consolidations over time. You like the backdrop of what they're talking about with silver production. Mining in general is catching a little bit of juice. Little W breakout in here, Mark. At least I do see this one.
I think there's some very interesting things here. I really do, you know.
Mm-hmm.
The last one I have is pick your gold miner. Let's go to AUY. I mean, pick your cheap gold miner. Once again, I think there's opportunity here in gold. Once again, if from a cash flow perspective in particular, but you're going to have your bumps of directional movement. And so, like, when I analyze what I do anything, and whether it is trash picks or more expensive picks or mainstream areas of the market, I'm like, what do I believe in? And sometimes it's just the momentum's overwhelming, right? At the start of the year, pick a stock under $5, didn't matter. They all made you money. You know, but then when everything isn't working, well, okay, what in that area is working? And I really do think when you look at the commodity areas, and I could bring up a lot of cheap oil stocks and a lot of cheap gold stocks, that even in the relentless downward pressure, I mean, pull up CDEV. It's not a pick for me this week. But in this downward pressure where small stocks have been getting killed, a lot of these stocks are just basically doing nothing, you know, and they're doing nothing. They're doing nothing. They're withstanding that real negativity. I think that's telling. But MUX, CRK, and then pick your gold mining stock. AUY is always my favorite because of the option liquidity. But I think there's some opportunity in cheaper commodity plays.
I know the way you're going to answer this question. You don't care about the earnings coming up?
Not on commodity stocks. I know what the price of gold is. And every once in a while, there's a surprise, right? You know, they announce something that happened in a mine that the market didn't know. But I know what the price of oil is. I know what the price of gold is. I know what the price of silver is. And I've known what it's been for the last 3 months, right? And so that's why I don't worry about earnings and commodities like I do everywhere. And everywhere else, I'm paranoid. Sure.
Well, you say pick your favorite gold miner down here. I actually was looking at GoRo, you know, a little bit.
That's
Mark.
A pretty chart.
I don't know if you saw this. It's another gold miner.
I didn't.
Gold Resource Corporation.
Yeah, I know who they are. I just didn't look at it this weekend.
And it's got reversal characteristics. It's stuck its support over the last 3 months, right? I would prefer Yamana longer term, just because of the option liquidity like you talked about. So, I mean, there's a couple of good miners down here in these prices. In fact, out of all of the $5 and under stocks, which we can qualify for this segment, by the way, this segment every Monday, guys, stocks got to be less than $5.
It has to be less than $5.
Less than $5. And so I did think the miners showed me some interest. So AUY, I can see it for sure. I mean,
and the thing about it is, you know, with the relentless beating that cheaper stocks have, like, I'm really excited for this segment 12 weeks from now, after you've seen classic bottoming patterns and this and that. You know, you just got to be patient and wait for them. Like, patience is such a virtue in trading. You know, like, sometimes there's like, I have more setups than I know what to do with, and other times you're like, all right, I'm gonna let this play out. You know, action junkies, well, become a day trader.
Different animal than swing.
If you're an action junkie, become a day trader.
Out of all the ones, let me flash through them one more time. So give me the 3 symbols again.
CRK,
Okay, I'm a wait on this one, but so are you.
MUX.
I can see this one the clearest, although obviously the candle down 3% today. Still got to trigger and confirm.
And then AUY.
Light gold mining in general. I got no problem with a little flag play here. You just got to navigate earnings next week. If that is in your rules, you might want to pick something else. But if it's not a part of what you're doing, like with you, Mark, on gold mining type of companies, commodity companies, that's just the only note to be aware of. So out of all of them, I think MUX for me personally is set up the best out of the three.
No, that's what I got for you for trash that makes cash.
All right. Well, Marky, we did a show.
We did a show. It was the Mark and Tim show.
Yeah.
Did we get any answers on 80s favorite sitcoms?
We did. A couple of them came in here earlier, and I want to remind a few people that maybe they did not remember the 80s based on a few names I saw. Seinfeld, Jable, I'm a huge Seinfeld fan. I started rewatching it on Hulu. I think that I would call that a 90s sitcom.
That's a 90s.
Marky,
sitcom.
wouldn't you?
Yeah, it's 90s.
It might have started in 89. Now you got to remember Mad About You.
That's 90s.
90s as well.
I like both those. I loved sitcoms from that era.
Friends
like both 80s and 90s.
Jable, one more decade, my friend. One more decade before that, but I do like those three sitcoms. Even Jonathan, Full House. I want to call that a 90s sitcom too. So
see, I was a teenager in the 80s. There was no Full House in my house, so
that's right.
That was the 90s. Cheers was my favorite also, Tim. I loved Cheers, but I liked all of them. I really did. Three's Company, late 70s, 80s. I really enjoyed. It was risque. Like seriously, Three's Company was one of those, ooh, this is a little risque. You can go back and rewatch it. Golden Girls,
John Ritter.
Yeah, John Ritter.
Yeah.
Okay. Golden Girls is I think that was late 80s, maybe early 90s.
Yeah. Did you know? This is the old my one tidbit about the Golden Girls. Who was the mom in the show that was supposed to be the oldest? Mm-hmm. She was the youngest, in real life.
I don't know if she was the youngest, but she wasn't the oldest. I do know that.
I know she was younger than the daughter that played.
Yes, she was. Yes.
Yeah, so that's an interesting.
And the daughter, I can't remember what was the daughter's name. She had some hilarious on like those roast on.
Yeah. She did.
On the Comedy Central roast, she was on there a few times. Very, very, very funny woman.
Lots of good ones. I got a great answer from Blake though. Who's the boss? That was a great
boss. There you go, little Tony Danza, Alyssa Milano. Yeah. I like I'm getting old. I'm becoming very nostalgic. Very nostalgic as I get older. But
sure. Estelle Getty is I'm getting a couple of names in here. So interesting. All right, guys, that is our show here today. If you are brand new to tackle trading, here tonight at 7:00 Eastern, we do our weekly onboarding program with Coach Frank, where he's going to go through how to use your pro membership here on the site. It's going to be right here on YouTube. So we go live there at 7:00 Eastern Standard Time.
And we have Bear Market Survival Guide tonight, 8:30, Bear Market Survival Guide. 8:30. I mean, and if you don't know what Bear Market Survival Guide is, it's actually a nice bullish system that protects and it has a way to protect. And so I like Bear Market Survival Guide. Lots of good stuff. And then we're releasing a podcast later today.
We sure are. We're going to highlight earnings season. Yeah.
Matt, if you didn't get your fill of Matt today, don't worry. He'll be here on your podcast. Listen to him later tonight.
That's right. Other than that, guys, if you're not yet a pro member, we've got a very standard offer. You can go directly to the website and sign up with a 15-day trial. Come and see what we do in our courses and, with our webinars and our traders lounges and all the stuff that goes into our pro membership. That link is also in the description of every one of our YouTube videos. So come join us on the back end. We know that you're going to love it. Outside of that, guys, we'll see everybody tomorrow.
And check those intraday support levels form. Make sure they form before you enter new trades. That's my final thought.
I love it, Marky. Thank you.